Hey YouTube, Everyman prepping here. It's getting a little late in the evening tonight and I finally got a chance to get to the story, but as we know from earlier in the day, the Bank of England and London almost fell. The 10-year gilt bonds were going, the yield was increasing so fast and so rapidly, they almost lost all their pensions and the mortgages that are tied to it, and the Bank of England had to do something drastic to stop it. Basically what their financial people are saying is to save not only the Bank of England and the UK, but also save the world. We'll talk about that a little bit here. Like I said, just a quick video. Please like, subscribe, continue sharing the video, ring that bell, do all that good YouTube stuff. But basically, it seems that the gilt bonds over there, which are tied in with tons of pension plans, had it. Mortgages that most mortgages in England, in the UK, are not fixed. They're mostly adjustable, and they're tied to the 10-year gilt bond over there, and it's due to adjust very soon, and it was skyrocketing. As interest rates go up, bond yields go up, and then bonds get cheaper, but no one's buying them, and so the yields keep going up, and pension funds and hedge fund managers in England were freaking out. They thought it was going to be a Bear Stearns moment, a Lehman Brothers moment. Everything was going to collapse. Mortgage rates were going to go through the roof. People were going to be out of their houses. Pension funds were going to collapse. Everybody's going to lose their pension. So what did the Bank of England do? Well, they were supposed to do quantitative tightening. They were supposed to get assets off their books. They were supposed to start selling bonds. They couldn't do that. And the only way they could save the Bank of England, the only way they could save the country this morning is they bought over $1 billion worth of bonds. They went into quantitative easing again. They turned the money printer on and they started printing that money and buying assets and putting them on their books. They did over $1 billion and this saved it. What it did is it drove down that yield on the 10-year gilt low enough to where the pension and the hedge funds people were not going to have to go under. It's going to save the mortgage people for a while. And when the U.S. 10-year bond hit 4% last night. And then as soon as the Bank of England did their work and started turning on their money printer, it shot down about 32 basis points. That's the largest drop since 2009, I think they're saying. It was a huge straight down drop. So that that's saving the U.S. bond market. Everybody's worried about if we hit 4% on the 10-year bond, the U.S. bond market's going to crash. Basically, none of this can happen before the elections in November. And our Fed over here said they're going to raise rates again come November. It's after the elections, but they might have to go into quantitative easing as well. They might have to turn on the money printer. And what happens when you turn on this money printer? Inflation. So basically, the Bank of England and the UK, they have chosen hyperinflation, as of right now at least. They're going to keep printing money, turn on that printer, buy bonds, add to their assets. The Bank of England add bonds to their assets, keep the yield low as much as they can, and see if they can ride it longer. That's also going to cause inflation over here to go up. As that money's cheaper, as that 10-year goes down, money's cheaper, more money in the system, more inflation. So that's what we can look forward to over here is more inflation. The Fed can't, either Fed, the UK Fed or the US Fed, they can't have it both ways. They can't have high interest rates and no inflation. And inflation is all. What they have is high inflation, and the way to kill it is high interest rates. But then you have bonds going up. So you can't have a low yield on bonds and increase in interest rates. That doesn't work that way. That's not how economics work. So if they're going to raise interest rates to stop inflation, the bonds are going to go up. And if we have too much debt and you can't service the debt on those bonds because of the interest rates, it's going to crash. Either way, the system's going to crash, both in the UK and the United States and around the world. They're just, playing hot potato right now, trying to keep it going as long as they can. So just be aware of that. They saved the day today. The Bank of England saved the world today. They did that by turning on the money printer and causing more inflation. And so it's, how long is that going to last? A week, 2 weeks, a month? Who knows? There's nothing in the fundamentals that's going to change these yields from going up. Nothing's going to stop it. It's still the same pressures that we have. So it's going to eventually break. And when it does, you want to be ready. You want to have the least amount of fee. Once again, let me say this before I get in trouble. Not a financial advisor, not a financial planner. just an opinion. Don't do what I say here, whatever. But you want to, when this thing breaks, you want to have the least amount of of fiat currency on hand as possible, because it's going to become worthless, and there's going to be a lot of trouble. You're going to want to have some of that cash on hand to buy stuff as stuff hyperinflates, and you can get it before the credit cards don't work. All that stuff goes down again. You're going to want to do that. Also, we're starting to hear from banks here in the United States that they're giving people a lot of trouble with withdrawing money. If you take over 5,000, it used to be 10,000. They do a little report on you and tell the IRS and the government, Homeland Security, oh, what are you doing with this? Make sure you're not money laundering, whatever. Now we're hearing that people pulling out like 5K, 5,000. The banks don't have it for one, because they don't keep cash on hand, because they hate cash and they're trying to get rid of it. But the tellers are starting to ask people, what do you need this for? Why use your money? If you tell them none of your business, then they start scrutinizing even more, and they might deny it. Citibank just put out a letter to a lot of its depositors saying they have the right to freeze your account. They have the right to suspend your account if they feel like it, for any reason they want, without even telling you. And then they have the right to ask for anything they want from you to prove it's your money and that you really own that money. And then they have a certain long period of time before they can even decide whether or not to let you have your money. So once again, not a financial advisor, but what I would do if I had a Citi account, which I don't, but if I did, I would definitely be closing that down and looking to go somewhere else, maybe a local credit union if I had to. Just putting the bare minimum for bills, buying some hard assets with the rest of that, and that could be anything from prepping supplies up to metals, up to crypto, whatever it is. As long as it's in your possession and you take it, it's probably gonna be better than sitting in that bank. So that's all I have. This is a very quick video just to kind of go over, the almost death of the financial world this morning that was saved by turning that money printer on. So please post any comments below with what you've experienced seeing all this. If your bank is giving you a hard time withdrawing money, if you're seeing other stories about people being denied credit, use of their cards, things like that, let us know down below. Until I see you next time, keep your ear on the ground and head on a swivel.